All right. So let me see one of them here. Yeah. All right.
Should be going live in a minute.
All right.
Are we talking about the presentation? Is it a presentation or?
Yeah, it's on the presentation. I said, where is the securitization?
Okay, we are live, everyone. And we'll start this meeting in a few minutes. We're waiting on Alderman Carmichael and Alderman Leisha.
Ready?
Oh, you say you wanted the last one, right?
Here's yours.
Okay.
Sign.
All righty. Waiting on one more.
Here.
Thank you.
There you go. Doors open downstairs.
It is, yes. Hello.
Hey.
I hope you weren't waiting.
Good evening.
We were. Let's see, we have time.
All right, thank you.
All righty.
That's
it?
You don't have anything.
All right.
Thank you.
All right, let's go ahead and call this meeting to order.
Oh, thank you, sorry.
Is there any public comments? Anything? Hear none. Let's get right into the agenda. So we're here to talk about the 2022 general fund draft.
Yes.
Did you want to explain to our new alderman where we're at in the process?
Yes.
And what we do now and then next and so on?
Well, as a result of all of our meetings, whether it was our interdepartmental meetings, as well as our budget and finance committee meetings, we've compiled all the input of our department heads, and of course, went line by line throughout their departments and their line items to produce this draft that will allow the committee as well as our to go through it and review it for the purposes of making a decision on primarily, not only to be able to get an idea of what next year looks like as well as the subsequent years, but also it provides a tool to make a decision on what the appropriate property tax levy is, considering all that. So having this in hand, at least you get some sort of perspective of the financial outlook for the next 3 to 5 years. So based upon that, if we can thumb through. I had some highlights. We have our presentation PowerPoint itself that gives some comments on overall comments on our draft here, and this is the general fund, but there is another fund where the revenues have a relationship with our general fund, and I'll get into that shortly. But the main thing is that this summary, this general fund revenue and expense summary is at the cover, and it summarizes all the detail. It's a 20-page report, and it summarizes every single line item in our revenue and expenses in our general fund. And of course, this summary provides our audited results in the past from 2018 through audit 2020. This report, it's right in this one right here. This right,
The larger one, yeah.
right there. Yep. It also gives what we budgeted for 2021, and of course what the trends are, the recent trends are leading us to a projected 2021, and how we're comparing. What we're noticing right away is we had I would consider a COVID adjusted budget for 2021, because we weren't sure as far as how the activity, specifically like for the recreation department, how that was gonna result, especially in the first quarter. What we found is that our revenue sources have rebounded for the most part, and of course our expenses being in line with our revenues, we are projecting a modest surplus of just over $20,000 as a result. That's how things are tracking so far, with probably 9 to 10 months of transactions being posted. That's where we're tracking at. But with that basis, in our departmental meetings that have occurred in our committee meetings, we have the basis of projecting the years 2022 through 2025. Looking at how things are how things entering that information into our system. We are still expecting a modest surplus in our general fund of just under $18,000. As we, and then of course, we see that after that significant growth from 2022 compared to our budget, we feel that the revenues and expenses will level off in the 3 subsequent years. The thing to bear in mind with the general fund, there is a subsequent report called the Berwyn Municipal Securitization Corporation. That is the fund that captures our state taxes, our state income taxes, our state and local use tax, 1% sales, and our home rules, which is a pretty big driver of our revenues. And the thing to bear in mind when you're looking at this report is that this fund captures these revenues, but also sets aside the required debt service bond payment. And then whatever is left over is called what you call a residual. And that is set up to where those funds are forwarded to our general fund. And you'll see that the result of that tie into page 3. It's a GL account called 4900. It's toward the middle. And you'll see that those numbers tie into, will tie into the amount transferred out of Berwyn. So, but in essence, as thumbing through the detail, the revenue and expenses, we talked extensively with our department heads. I think the main highlights as far as this 2022 budget is with our revenues. It appears for the most part that the revenues have recovered. I would, especially in the state taxes category. We've also not mentioned here, of course, our public safety expenditures, as we talked about in the fire with our fire chief. We've seen a significant jump in our paramedic billing. So those are some things that have resulted in our revenues returning to our 2019 levels. And of course, we talked about the Berwyn Municipal Securitization Corp. The areas though that we saw some softening is perhaps in our fines, in our public safety. That will take longer for, it appears that that's going to take longer to return to 2019 levels. I think we talked about the stepping back as far as enforcement, especially during where we're the pandemic related months and so forth. So we see a slower progression in those revenues coming back. But needless to say, those revenues the state taxes are strong. Our expenses, we foresee the expenses being in line with our revenues. The thing to be mindful of is, we still have future union agreements to consider. What the true percentage of those union agreements is yet to be determined. In our projections, I mean, we've set an interval of somewhere between 2 and 3%.
Sure.
On there, but that's not finalized. Again, we have to be really mindful of our health insurance. We've been able to keep our broker at Berwyn Insurance. They've been able to keep our health insurance increases within 5%, but we just have to consider that could change either for us or against us, and we get a better idea of that sometime in February. The other thing is workers' comp, general liability claims. In recent years, those have been pretty high. Hopefully, we have a better year this year. I'm budgeting very conservative right now with that, but that could change depending on how our year-end claims go. So, with that being said, overall, yes, the overall picture 2022 to 2025 is, the impact from COVID-19, thankfully in that regard, you know, from a financial, that it was not as severe as we feared, but of course, I mean, you know, as horrific as that has been for us, the financial impacts were not as severe. We do expect to break even balanced budgets 2022 through 2025. And of course, maintaining our strong fund balance percentage. Of course, our policy is that our fund balance is at least 16% of the following month's expenditures. And our percentages are at or above 20%. So we've been able to keep those strong fund balance levels.
So when it comes to our budget as well, you know, there's a high percentage of really salaries, pensions, and benefits. So when it comes to revenue, that's why, and we don't have a lot of retail here, you know, which is probably good in some ways because retail's kind of shrinking. So those are, we look for other streams of revenue through, you know, other ways we can get revenue into the city. But if our budget is it 82% salaries, pensions, benefits?
It's historically been somewhere around 70%.
Okay.
Salary and related. I'd say 70 to 75%.
Okay.
Versus citywide expenditures.
Okay.
Yep.
Okay.
For that. So this leads us to the consideration of the tax levy. There's really, in reviewing the revenues and expenses, it seems obvious that there's really only two options to consider. The first option is option A, and you know, that's an increase of $500,000 to our debt service fund as to fulfill our covenant with the bondholders. When we issued our bonds, we had provided them with this a $500,000 annual increase. So to be in compliance with that, that's the proposed increase.
And we've done that every year, so that's just what we've done.
That's correct.
That plus.
Now, the other thing to consider, and I'll get further into it tomorrow when I make the presentation to the cow, we went on the Cook County Assessor's website to the calculations as to how that translates to an individual taxpayer. Now, on the website, it's still referring to 2019 assessments. I was hoping that there would be a 2020 version, but we're still gonna have to go according to like $192,000 average property value, knowing that there's certain properties that are much higher, some that are right there, and some that are lower. But based on that value, the $500,000 increase from Berwyn, the city of Berwyn's levy would amount to $25 per taxpayer, based on that median value.
So they can calculate it and figure out from there if your house is valued at $250 or $300 or $400 or whatever, figure out what's going to be.
The only other option to consider, an option the city has selected in the past, is perhaps something based on a CPI or an inflation rate. This option considers the bond covenant as well as obviously funding our police and fire normal cost. The only difference is it builds in a 2.3%. That's the current CPI inflation rate. We build that in there, and the main purpose of that is just to absorb an impact of unanticipated expenses if the health insurance comes in higher than the 5%. There are many in COVID-19 expenses. If there are COVID-19 expenses that are not consistent with the ARP, the American Recovery Plan guidance, that would be another reason that this could help absorb that. And finally, if our, another example is if our claims, general liability, workers' comp, came in higher, much higher than expected. With the same formula, that increase would go to the general fund, and that would equate to about $48 per taxpayer, based on $192,000.
Okay.
So
And this covers the pension,
this,
to fund the pensions properly and move forward from that.
yes, the pension loan. So
Okay.
those are really the only two options that, you know, is worthy of consideration. When I present the, and of course, I'm just giving you a summary of what we levied last year, and then, of course, just comparing option A versus option B.
So on option B, it would be almost $1 million,
Yes,
Yes.
as opposed to 500.
Yeah, and that covers the pension.
yes,
Okay.
yeah. The bond covenant covers our pension costs as well,
Yep.
but the main difference is that inflation
Mhm.
consideration. Key thing to consider is, I tried to articulate it in the communication, is that, you know, it's just important that you guys determine, well, let's consider this option for the vote coming up, so we can draft the but again, you're not necessarily bound to that number in the weeks ahead, we just have to do that.
That has to be done by the end of the year, right?
Right, actually, it's gotta be filed with the county by the second Tuesday the last Tuesday, actually, of December. So at least that gives us some
Sure.
time to do that, so.
So tomorrow's just a straw poll.
Yeah,
What direction we want to go, and
Yeah.
then have conversations after that.
yes,
Okay.
yes. I'll get into, like, tomorrow, I'll get it further into, like, pros and cons of each of the
Sure.
options as I'm articulating here, and rehash it, in a summary form as far as, where things are and how things are going from a financial standpoint in the future.
After tomorrow, then we have more of these meetings.
We really don't have to. I mean, we can, but at that point, they're just gonna come back with,
Because we pick five.
yeah, so we'll pick A or B, and then from there, then they'll come back with the full ordinance.
Okay.
What we will end up doing, though, is just meeting sometime around the 1st of February, just to go over, beside these two, at that time, I'd have like our capital projects fund, perhaps, a couple of other funds available to consider.
Mhm.
And then once you guys are comfortable with us moving forward, presenting a draft before council, like 2 weeks after that, that's when we have to engulf the citywide funds into that big budget document, so.
Would that change these numbers?
Well, a lot of the numbers will change because our expenses will be kind of final by that time as well. Like, right now, a lot of this is estimates, so we're targeting, we know, but there could be some, things out there that are gonna change things.
Yeah.
But this is a pretty good, basically, draft
Yeah.
of what it's gonna be.
And what you're referring to there, Alderman, is the property tax items. Once council votes on the ordinance in December, we will be committed to that levy amount. To whichever option or combination of those happens. So you'll see those revenues appear like at the top of property tax revenues for not only the general, but of course, fire and police, as well as our debt service and library as well.
And once we commit to a number, then it's really up to the county to figure out where that money's gonna kind of come from.
Yeah.
Commercial, residential, how do they kind of evaluate our properties to make sure that money comes into the
Yeah.
city?
And, what I'll try to articulate tomorrow is our levy is still only about 33% of the total tax bill that our residents receive, so.
Yeah, a lot of residents, I mean, they look at the bottom
Yeah.
dollar, but there's, 16 other taxing bodies in there, so everybody's doing the same thing levy-wise.
Mhm.
The school boards and who else, the counties and everybody else, so obviously, everybody's trying to, we put our number in, the other ones have to they usually put a higher percentage, but they don't get that percentage normally because we're on roll.
Correct.
Good.
Correct. So,
So if they put 5, they might only get 2.2.
Yeah.
Just depends.
Any other questions?
Nope.
No.
Great. Well, let's go to new businesses really just tomorrow.
Yeah.
Like Ben said, is we're gonna go through these options. All of us have time to ask questions during that time. We can talk with other aldermen as well to see where we're gonna go or where we feel we're gonna go. And then we'll go from there.
Yeah. And our handout for tomorrow is similar to what you guys done, but like, I'll go over like our process, our timeline and due dates and things like that. And, you know, kind of summarize what we went through here as far as interdepartmental meetings and public meetings and so forth. So
Okay.
that's the only thing else.
Okay.
Good.
That's all.
All righty. I just need a motion to adjourn.
I make a motion to adjourn.
Second?
All right, we're good to go. All in favor, we got it.
Aye.
All right. Thank you.
All right.
Thank you, and thank you guys for waiting.
Oh, that's
No
okay.
problem.
I wish I could say, Jesus, we better, oh, no problem.
Will we have a chance at some point to add some like visuals to this, like pie charts and stuff like that?
Awesome.
That would be, I think that would be helpful for